It's the first quarter of the new year for Newmont. I am with CEO Tom Palmer. Tom, welcome to Kitco.
Thanks, Michael. Good to speak to you again.
What were the Q1 highlights?
Q1 was a solid quarter for us. We're still continuing to manage through COVID. So our real focus is on the health and safety of our workforce and local communities. But with that backdrop, to produce 1.5 million ounces of gold and 370 odd gold equivalent ounces from other metals, a very solid quarter to begin the year. And we're still very nicely positioned to deliver on our commitments for this year. We'll be back-end weighted, so our second half is going to be the stronger part of the year for us, particularly as we move into higher grades at Boddington in Australia and Ahafo in Africa. But very solid quarter to kick off 2021.
Can you update us on the development projects that you have, Ahafo and Yanacocha? I believe those projects are supposed to add 300 and 500 respectively.
Certainly. So we've got the Tanami Expansion 2 well underway. That's sinking a 1.6 kilometre shaft at the Tanami mine in Australia. That's progressing very well. First half of 2024 is when we'll start to see the improved costs, improved productivity and additional ounces. The next project lined up for approval is Ahafo North, a new mine just 30 kilometres north of our existing Ahafo set of operations. Looking at July for full funds approval there, just tying up the last permits with the EPA in Ghana. That's progressing very well. And then the next big project is Yanacocha Sulfides, the investment in a new processing infrastructure to unlock the sulfide deposit at Yanacocha. We've got a story at Yanacocha that's going to play out like Carlin did for Newmont back in the 1990s as we move from oxide ore to sulfide ore. And that full funds approval is also slated for this year in the second half. All of those projects are in the guidance that people look at, and we're very much looking forward to getting Ahafo North and Yanacocha Sulfides approved and then delivering on the value that's going to come from both those important projects.
How well does Newmont benefit from rising copper prices?
We've got some nice exposure to copper, but also silver, lead and zinc. So at the moment, copper comes predominantly from Boddington. So we get a nice little exposure to copper from Boddington. And as I say, the other metals out of Penasquito also provide some nice upside. But as we look forward, and when I think about copper, when we at Newmont think about copper, we're thinking longer term and the move to a change, energy transition in our world economy, which is likely to play out in the second half of this decade, towards the end of this decade. We'll have some very nice exposure to copper as we bring on the sulfides project at Yanacocha. Boddington continues to deliver. And then we've got in our organic project pipeline several projects, GT Gold, our new acquisition, and then a number of our very large mega projects, 2 in Chile and 1 in British Columbia, that all have copper in them. So end of this decade, as we shepherd our organic project pipeline, 15 to 20% of our metal will be copper. And I think copper will certainly have its day in the sun at around that time. So we've got nice organic exposure to copper.
You did mention Boddington. You had a news release or a piece of news that was out about a month ago. You're talking about an investment in that mine, autonomous haul trucks. You said that was going to extend the life of the mine and provide a return on the investment. Can you take me through the economics of that? Why the investment in autonomous?
Sure. And in autonomous, I implemented the first autonomous mine in the world. I'm not sure if you can see over my shoulder to the truck that was part of that process. So autonomous is proven technology, particularly in Western Australia. We had done a significant amount of work at Boddington to improve costs and productivity and extend mine life. So we had in the operation a mine life that underpinned a fleet replacement. And then we had, with the introduction of autonomous haulage, a business case that had returns, internal rates returns of greater than 20%. So it delivers and pays for itself on its own at Boddington because we had the mine life in front of us to underpin that fleet investment. It's going to deliver significant safety and productivity improvements. It is fundamentally safer to run an autonomous mine. I've got a lot of experience with running autonomous mines. It is a fundamentally safer way to run an operation, and it's more productive. You no longer have fatigue breaks and shift changes and mill breaks and the like. But the other important value proposition for us with Boddington is it provides a base case for where we can use autonomous haulage in our other operations or in some of our big projects that are in our organic project pipeline. And you don't want to be putting autonomous haulage into a new big project for the first time if you don't have experience operating it. So very important that you have the base case, the experience, the knowledge within your house, within your shop, to be able to then to apply for those to those projects. When you think about those big projects in our pipeline, they're very large open pit mines, 2 in Chile and 1 in British Columbia. If you introduce autonomous haulage to those mines, you no longer need the width of haul roads that you'd have in a traditional mine. You can reduce those haul roads down to a single width because the trucks will have passing lanes they reliably meet at every single time they're moving around the operation. Reduce the size of those haul roads, you can steepen up the walls, you can move less waste to get to the ore. It fundamentally changes the economics of those operations. Then you start to look at energy transition and a move to net zero. Electrification is going to be an important part of that equation. Combining automation with electrification and where you'll need to have recharging stations for batteries is going to be an important part of the solution for the mining industry at the end of this decade, certainly into the 2030s and 2040s. So our investment in Boddington pays for itself today, but is setting the foundation for future operations at Boddington for decades to come.
You talked about electrification. ESG has been an issue that has come out. Look, you have large operations. There's a lot of legacy operations that you have there. What type of progress can you make in terms of getting the carbon footprint down on such, resource energy and such energy-intensive operations?
We've actually made a commitment that we'll reduce our greenhouse gas emissions, both the overall volume and intensity, by 30% by 2030, and that will be net zero by 2050. And we can reach out to 2050 because we've got a organic project pipeline that allows us to see out that far and make those investments to get to net zero. When we look at the commitments to 2030, if we do nothing else but shepherd our current business plan through and our move to more underground mines, we get about 40% of the way there. What we'll need to do to get all of the way there is move to more renewable energy, both on our mine sites or supporting utilities putting renewable energy into the grid that we then provide the base load to buy, and through the electrification of equipment, both open pit and underground. So it's those sorts of things that we are building into our plans to get to at least a 30% reduction by 2030, but then looking beyond that to 2050 to understand what we need to do to get to net zero from our new operations that we'll build in the 2030s and the 2040s.
Let's turn to gold. We're about in the mid 1700s right now. What's the smartest thing, or what have you heard about gold that looks good for you over the coming year?
When I look at the level of fiscal and monetary stimulus coming into the world economy, the continuing uncertainty around the pandemic, it bodes well for gold to hold its current levels and even move higher again. So pretty bullish about gold price going forward. But we run our business with discipline, assuming gold's at $1,200, and we work to improve our margins and grow our mine lives at $1,200. At $1,200, we generate the cash to reinvest back into the business for our organic project pipeline, and we pay a $1 a share sustainable dividend at $1,200. We're then leveraged to that gold price. So for every $100 increase above $1,200, we generate $400 million of free cash flow every year. So at current gold prices, that's well over $2 billion. And then we have a dividend framework that provides clarity and predictability and stability to our shareholders in terms of how they can expect to see that excess cash returned to them. And that's proven to be a real value proposition for Newmont. We're seeing it in terms of some of the folks buying into our stock, and we're seeing it in terms of how we perform against our peers on the S&P 500. We've got a dividend yield of greater than 3% now, and we're very much sit very comfortably with some of the very best in the S&P 500. So the discipline at $1,200 and then having that exposure to those higher gold prices presents a very good value proposition for Newmont in the wider investment community.
Gold may have found a new level right here, and then obviously copper coming up very strong as well too. I mean, that must change decisions that you're making. That must you're looking at what you've also got on the pipeline and also what's out there in the market.
Yeah, Michael, we're very clear on our strategy that we are the world's leading gold mining company. But when you then look to our current operations, our organic project pipeline, and where we look to grow our business, we're very much focused on quality gold assets that meet our world-class definition. So we look at greater than 500,000 gold equivalent ounces a year, $900 or less all-in sustaining cost, a mine life of greater than 10 years, and in top-tier jurisdictions around the world. And that's a real differentiator for Newmont. When we look at what we have in our portfolio and where we look to go and bolt on to our portfolio, as we did in the first quarter with the acquisition of GT Gold, copper often comes with the gold in those prospects. And so by focusing on being the world's leading gold mining company with clarity on our strategy and world-class assets, we are getting a natural hedge or exposure to a very important strategic metal in copper.
A year ago when you did this, Bitcoin was 9,000. It's now over 50,000. It seems to be gaining broader acceptance as an inflation hedge. Is there a point where you need to be making a bigger case or a stronger case for gold?
Gold is very durable. It's been a store of wealth for thousands of years and multiple civilizations. And when I look at and you see some of the World Gold Council reports, you're still seeing gold very much has its role as that store of value. It's an $11 trillion market. It's liquid, it's regulated, it's easily transferable. And I think gold is going to be around for a very long period of time.
Tom, thank you for speaking with Kitco.
Great. Thanks, Michael. Good to see you again.
My name is Michael McRae with Kitco Mining. I've been speaking with Tom Palmer, CEO of Newmont.